Hey everyone, welcome back to Corporate Decoder. Today, AMASS Brands Inc. just filed their quarterly report for June 2026 and I am seeing some serious red flags that matter. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is burning through cash and their stock is in serious trouble. But a new listing could change everything. So AMASS Brands, ticker symbol AMASS, just dropped their quarterly report for the period ending the 30th of June 2026. This filing is a big deal because it gives us a look under the hood at their financial health, and right off the bat, things look pretty rough. Let's dive into the balance sheet. As of the 30th of June 2026, they had about $1.5 million in cash. That might sound okay, but look at their liabilities. They have almost $26 million in total liabilities, and that includes almost $10 million in accounts payable and over $3.7 million in secured credit facilities. That is a lot of money owed, and their cash on hand isn't enough to cover it all. Their total assets are about $28 million, but a big chunk of that is tied up in inventory, which is over $11 million. Now, inventory is good if you can sell it, but if it sits on the shelves, it is just money tied up. Now let's look at how they are actually making money, or in this case, losing it. For the 3 months ending the 30th of June 2026, they reported a net loss of over $7.5 million. That is a huge jump from the same period last year when they lost about $1.2 million. And for the first 6 months of 2026, their net loss ballooned to over $10.5 million. Last year for the same period, the loss was closer to $5 million. This means they are losing money faster than ever before. Their operating loss tells a similar story. For the second quarter of 2026, it was almost $6 million, a massive increase from the less than $1 million loss in the prior year. They are spending more on sales and marketing, which is understandable if they are trying to boost revenue, but it's not translating into profits. And then there is the general and administrative costs. These costs more than tripled for the quarter and more than doubled for the 6-month period. A big chunk of this jump is due to becoming a public company, with legal fees, professional services, and costs related to their direct listing. They also took a hit from impairment expenses, meaning some of their assets lost value. This is never a good sign. Looking at the statement of stockholders' deficit, you can see that their accumulated deficit is massive, over $51 million. This means that since the company started, they have lost way more money than they have made. And their total stockholders' deficit, which is basically saying they owe more than they own, is over $1.2 million as of the 30th of June 2026. This is a clear indicator of financial distress. They have over 11.6 million shares of common stock outstanding. Even with a recent direct listing, the stock price is very low, hovering around $1. The company sells alcoholic and non-alcoholic beverages. They've been trying to make a name for themselves with brands like Summer Water and AMASS Spirits. They even acquired a majority stake in 222 Spirits Holdco in late 2024. A big event was their direct listing on the NASDAQ in May of 2026. This allows existing shareholders to sell their shares directly on the market. It is a way to become a public company without going through the traditional IPO process. They also raised about $7 million from a private placement of Series C convertible preferred stock. This is crucial for their survival, but it also comes with a lot of strings attached, including warrants and conversion options that could dilute existing shareholders. This section is critical. The company explicitly states they have substantial doubt about their ability to continue as a going concern within 1 year. This is a huge red flag, meaning they might not be able to stay in business. They are relying heavily on raising more capital through stock and loans, and there is no guarantee they will be successful. This is similar to what we saw with Bed Bath & Beyond or Rite Aid, where continued losses and reliance on uncertain financing led to their downfall. And looking at subsequent events, things haven't improved much. They received notices from NASDAQ that they are not meeting minimum market value requirements. This could lead to their stock being delisted, which is a death sentence for most small companies. They have 180 days to fix this. Plus, the exercise price on a key warrant was reduced significantly, which is usually a sign of desperation. In the controls and procedures section, they admit to material weaknesses in their internal financial reporting. This means their accounting practices are not strong enough, and there is a higher risk of errors or fraud going undetected. They are trying to fix this by developing better policies and procedures, but it is a long road ahead, so what is the verdict on AMASS Brands? They are in a tough spot, they have a lot of debt, they are losing a ton of money, and they are facing potential delisting from the NASDAQ. Their recent direct listing and preferred stock issuance provided some breathing room, but it is unlikely to solve their fundamental problems without significant operational improvements and sustained capital raises. The market value of their listed securities is also below NASDAQ's minimum requirements, a situation that has historically led to delisting for many companies. My biggest concern is their massive accumulated deficit and the explicit statement about their ability to continue as a going concern. They are burning cash at an alarming rate, and the path to profitability looks very uncertain. What I am actually looking for is a clear plan to drastically cut costs and a successful, consistent capital raise that doesn't involve excessive dilution or unfavorable terms. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, make sure you like this video, comment your thoughts below, and subscribe for more. Join our Discord community linked in the description.